Hmm? Uh, Good day and good afternoon. Then to continue with the statement of comprehensive income, my name is Simon Babaride. I want us to go back to November 2022 paper 1 to do it again. Then I stopped at the valuation of stock damage, and then I also talked about the depreciation on the assets sold, the profit made on the asset sold, profit or loss, and we got a loss in there, which is 4,200. Let me quickly just write whatever you have done. Make sure you write it on this platform. Depreciation, we put everything. We got the total depreciation to be something, but I'm going to write it there. Let's not talk about the loss on sale of asset, which we got it to be 4,500. We carried that one from the previous calculation. Then depreciation, we got our depreciation also to be 183,000 something, but I will have to check it again where we do that. Then our other calculation that we need to do is the rent income. Rent income. Then in our question here, they gave us the commission to be 4,560. The rent income is given to us as on the question paper, on the trial balance, is read 183, 600. Do not joke with writing in bracket. Any item that is subject to adjustment, write in bracket first. You do the adjustment then to end the format. Even if you have written in bracket and there is no need of adjustment, it's not necessary to cancel. Just leave it and write it again. They are not going to penalize you for that. Let's go to the rent. The rent adjustment is at the back, which is number 6, B6. A tenant has been leasing office space on the premises since March 2020. They gave us 2020 so that we know that this tenant is not a new tenant that has been there for more than a year. So that we know that we are entitled to at least 12 months rent from this person. Okay, they now said he also paid till 30 April 2022, and accounting period starting on the 1st of March 2021. Our accounting period is supposed to end on 28 February 2022, meaning that we got additional 2 months. Automatically, we have received 14 months instead of 12 months. Therefore, we need now to we need to read the instruction adjustment completely. Note that the monthly amount was reduced by 1,250 with effect from 1 January. Meaning that our 1 January should be somewhere here, 2022. It reduced by 1,350. Now, it means that amount that they've been receiving before reduced by 1,050, and we already received 4 months. We received from January to April. 4 months, we need to multiply it by 4. When we multiply it by 4, invariably it's supposed to give us that would be 5,400 if I'm not making mistake. Because 350 multiplied by 4, that would be 1,400. Then this one multiplied by 4, that's 4,000. Then it will be 5,400. You can do your calculation without the calculator. But if you know you are not sure, you cannot do that, use your calculator to confirm and do it right. The reason why I advise people to do some calculation without calculator so that they can save time. But if you are not sure of your calculation, just use your calculator. But you have to press the right button as well. Therefore, 5,400 need to be added back to 183,600 plus 5,400. Invariably, this will give us 190,000. 190,000, you now divide this one by 14. Why are we doing this? So that we know that there is no decrease of rent. We want to know how much have been receiving before the decrease. When we divide this one by 14, it will actually give us 13,500. That is the amount they've been receiving before the reduction. You can see the reduction is just the 10%, which is 1,250. Therefore, you now say, okay, the 2 months that you receive in advance, which is a liability, income received in advance, how do you get that? It means that now, when they reduce one by 1,300, it give us 12,150. It means that from 1st of January, we are receiving 12,150 from the tenant, but our problem here is 2 months that they receive in advance. That 2 months will now be 2 months received in advance will now be multiplied by 2 here, which is going to be 24,300. 24,300 is what we are removing here. When we remove it here, it's actually giving us 159, 300. If I'm not making mistake, please pardon me if I made mistake there. So that 159, 300. I believe I'm right. Then that is the income that we're entitled to for 12 months. This one will be taken to the balance sheet, statement of financial position under the trade and other payable. It's a liability needed. Therefore, other income that we might even look at is can be that income that we might even look at, or it's not given to us on this page, but as we are going through the adjustment, we pick up some other income. Therefore, let us look at the number 3. They said 33,700 received from a debtor whose account was previously written off as irrecoverable, was posted in error to debtor control account. This must be corrected. This is one of the areas that we have to be very careful. If a debtor has been written off or a debt has been written off, we don't take that debtor as a debtor again. It's no more our debtor. Any money receiving on that account will be categorized as a bad debt recovered. Then you write it as a bad debt recovered, which is other operating income. In this case, 33,700. Therefore, we have a bit of trouble here because this account needs to be added back to debtors control. Then what is our debtors control originally? Our debtors control is 2 million. Is 2 million. Let me just do it on the calculation side here. Our debtors control is 2,746,300. Therefore, 33,700 will be added back to it. When we do this with our calculator, we might like it to have 0, 0, 0. Then that will be 0 again, and this will be 0, and then this will now be 3 million. That will be 0, 0, 0. This one 0, and this one is not going to be 0. This one will be 7, 8 now. That means this one will be 7. It will be 3,780,000. If I'm not making a mistake, this is normally so. It's a 2,780,000. This is supposed to be our debtors control. We need to add this one back to it to give all the debtors control before they deducted this amount. This is the outstanding debt. Then they now say our outstanding debt must be multiplied must be adjusted to 3%. Our 3%, so that I can give all the provision for bad debt. If you do this, automatically this will cancel this. It will be 0, 0, 4, 24. This will be 21. This will be 25. Then that will be 6. That will be 65,400. According to my calculation here, 65,400 is our provisional. Then we need to compare it to our old provision. The provision they gave to us in the question for the previous year is given to us as 85,840. If I'm not making mistake, I believe I made a mistake here. This would be 85,400 here, because this one needs to be balanced up. 85,400 is what you are having now, but before it was 85,840. That means provision for bad debt adjusted will be 85,840 minus 85,400, meaning that we have difference of 440. 440 will be decrease in our provision. If you do that, we see that this our debtors control in the trade and other receivable, in the provision for in the trade and other receivable, under the debtors control, we need to remove 85,400 from our debtors to get the net trade debtors. Then that is another one for the other operating income. We'll see if we have additional. That's why we cannot close up until when we are sure that there's no any other income. Other thing we need to consider here, we go to number 4. The business signed a contract with the Always Safe Security for guiding the premises, and annual premium of 32,400 for the period ended 31st July 2022 was paid. Then they pay on the 1st of August. If they pay on the 1st of August 2021, this annually, it means that it's going to end on 31st of July 2022, if I'm not making a mistake. Therefore, this one is 12 months, but our accounting period ended 28 February 2022. It means that we have March, April, May, June, July. That will be a period of 5 months that we paid in advance. How do we do that? Now say 5 months over 12 months multiplied by 33,700. This will give us the amount to be removed from the, what is the security there? How much is the security expense? Our security expense is 72,500 according to pre-adjustment minus whatever be the amount we got here. Let me see what I can do. As we are saying, we stop at security expense, and we are saying 5 months has been paid in advance. According to this, when there's annual payment that started on the 1st of August, it means that it's going to end of July the following year. It's like you say January in the beginning of the year, it ends in December, another one starts in January. If accounting period starts in March, it means they're going to end in February. If the annual payment started in August, it's going to end July. Then it means that accounting period is now ending 28th of February. In March, April, May, June, July. 5 months already been paid in advance, 5/12. Then when we do that, by using our calculator, we are going to find the amount that already been paid in advance. We call it prepayment. 5 divided by 12 multiplied by 33,700. Then we got, it means that it's not correct. If you have a decimal number like this, it means that something is not correct. Let's go back to the adjustment again. What are we saying here? We are saying the business signed a contract with the same for getting, then is okay. It's ending, It's ending on July 31st. That is when it is ending, and paid in. Yeah, we are correct. It was paid on the 1st of August. Full payment. Then it means that when we look at it, August. Let us look at the August, September, October, November, December, January, February. This is a period of 7 months. Automatically, the 5 months has been paid in advance. Okay, where we made a mistake actually is this amount. You see, when you make a mistake, it hamper on your thing. 32,400 is what they pay per annum. Then, if you don't write the correct amount, you may not get correct answer. 5 divided by 12 multiplied by 32,400. That will give us 13,500. 13,500 will now come to this side. 13,400. In fact, when they want to mark, I believe you see they give this one mark, this will be 2 marks, and the answer here will be the method mark. Then 72,500 minus 13,400. This will guarantee us 59,100. 59,100 supposed to be the money for the security expense. Any other, for this one alone, you already got your 4 marks. Just pocket marks. How much was the depreciation we got initially? It has to be here. Continue. It has to be here. That was initially it's actually 257,900. 257,900. You don't have to write anything in bracket again here, because when you did it before, they already gave you 5 marks on that calculation. This one is just a method mark that you carry. The right figure from where you do the calculation to this, and you just give you 1 mark in there, which is very, very good. Then this one, we need to do this one. I believe remaining 1 item to be dealt with, but we need to conclude on which one remaining. We cannot just close it up. Then any other adjustment that we need to do. Then profit on the sale of asset. We have not done that. The profit on the sales of asset is actually 4,500. It's not a profit, it's a loss. Okay, it was a loss in there. Therefore, let's continue with the other adjustment. Then we go to the provision, this and that. Then any other expense that has not been mentioned. The other expense that has not been mentioned is the sundry expense. The sundry expense in there should be a balancing amount. The damage, we need to do the damage, loss due to damage stock written off, which is actually 47,515, which we already done before. Then the other one is a sundry expense that need to be balancing amount. we need to be very careful here. Let's see which one we have not done. Salary and wages. In fact, we're supposed to have attended to that one early before, ne? Salary and wages. How much did the salary give it to us? What adjustment did they want us to do on it? We should not forget that when we are doing this, all these expenses must be written down. Then salary and wages actually after the audit, ne? Audit fee. But for the benefit of this, let's just write it there. Advise you to arrange this thing in sequential order according to the pre-adjustment they give to us. Salary and wages, they say including contribution. They gave for 1,381,500. That is what they gave to us. And subject to adjustment. The adjustment we are having here is on adjustment number 5. Let us go through it again. All debtors, all details in respect of the February 2022 salary of an employee were incorrectly debited to the sundry expense. It means that the sundry expense is already being overloaded, which we need to remove from the sundry expense. But before we do that, we need to know how much is actually the salary for the year. Then let me do the adjustment of the salary here. The salary we have, we need the gross salary. Gross salaries. But if you need the gross salary of this, and we are giving the net salary, it means that net salary 11,525 plus 3,235, which is a payee, plus pension 990. This one will give us our gross because total deduction added to the net salary will give us the gross salary. They only deducted two things, payee and pension fund, which have been reading back, giving us the gross salary. Now, after we got this, they now say also the business contribute 2 rand for every 1 rand deducted for the pension fund. How much was deducted for pension fund is 990, which will be counted as 1 rand. Then multiplied by 2, you now say contribution also will be times 2 times this, which is actually 1,980. If I'm not making mistake, this is the contribution by the business again. Actually, it's going to be 11,525 plus 3,235 plus 990 plus 1,980. This should be the cost to the industry, because in some cases we have some questions that will separate the salary and wages from the employer contribution, but this one they added them together. 11,525 plus 3,235 plus 990 plus the contribution, which is 1,980. It should give us 17,730. You now say 17 plus 17,730. I'm so sorry for squeezing it here. Then, if you do this, then we can now edit plus 1,381,500, which will definitely give us 1,399,230. This will be for salary and wages. Do not forget, it's supposed to be immediately after the audit fee year. Then sundry expense now. Our sundry expense need now to be concluded now. But how do we conclude this? We are not done with the other income. We need now to say our other income need to be completed. What will be our other income? This one is actually 83,400, and this one supposed to be 2,440. Then our total order for this one will give us 2,200,000 here. Then we have our gross profit to be 3,690,000. 3,690,000. Then we can now say how much is going to be our gross operating income. When we add the two together, will be 3,890,000. Then, how do we now work it out? We are given the ratio. Our ratio there is let's go back to the number 7. We say income tax for the year is calculated at 30% of the net profit. The net profit after tax is 335, 56, 300. Means that net profit after tax is 356, 300. This one is actually, if the tax for the year is 70%, it's 30%. It means that this one will be 70%. Then we need to work back now. How do we work back? We need now to say we are looking for 30% because we are giving 70%, which is the profit after tax. 356,300. Then our tax will be 30 over 70, or known over known, UK method, multiplied by 356, 300. This will guarantee us our profit, our income tax. 30 divided by 70 multiplied by 356, 300. In that case, we secured 152,700. 152,700. Let me write in red. 152,700. It means that here, this is supposed to be 100% before tax. Profit before tax will be 100%. When we remove 30%, it gives us 70%. We are working back. 70 plus 30 gives us 100. Meaning that this one plus this gives us that. Automatically, we add 152,700 plus 356, 300. That will guarantee us 509. 509,000. 509,000 is profit before tax, which is actually gotten after we subtracted the interest expense from this. Let us look at the interest expense. Are we giving information about the interest expense? We might be. Let's look at 7. All transactions with respect of the loan were recorded. Interest of 142,250 on the loan is capitalized. Means that is the interest on loan, which is already been given to us in the answer sheet. If not, you just write it there. 140. Let me write with the red because the big expense in there. 142,250. How do we get this amount? It means that we subtracted this amount from here to get this. Why can't we add this one to this to get before the interest expense? What we do there? We now say plus 142,250. That would be 651. 651,250. That will be the profit before interest. 651,250. Do not forget we need to now interest income. Interest income. We need to calculate the interest income there. Our interest income, are we giving the information about the interest income? Yeah. If it's monthly installment, no, it's not that one. Any interest income we can think of here. Interest income is need to be calculated because operating profit is given to us actually. 575,000 is operating income. 5 what in answer sheet? 575,000. 575,000. That's why I say the answer sheet is part of the question paper. There are some information that will be given to you in answer sheet that you may not find in the question paper. If you don't read it carefully, you don't know what you are getting yourself into, and you will not be able to do it right. Mean that we are now saying we added this thing to this to get this. Mean that this amount minus this, it will now be minus 575,000. Then this one will give us 76,250. 76,250 will be here. 76,250 is given to us here. Now, after we have gotten that, we now know that this amount is arrived at by subtracting this one from there. Why can't we now subtract this amount from that? It means that we are now going back to say 3,890,000 minus 575,000. That will give us 3,315,000. 3,315,000. That is the total expenses. It means that we need now to added all these expenses and subtract it from this to know our sundry expense, which we are going to arrive at 239,855. 239,855. Then when we do that, automatically, without knowing it, we know that you're already done with this one. Thank you very much, and please share this and like it, subscribe. We are going to see more because we are going to do more on accounting at its best. Thank you.